Hello, everyone, and welcome to this month's latest edition of the 1515 podcast. I'm Chris Capel, and I'm the global head of the regulatory team here at Maples. Today on the podcast, I'm delighted to be joined by Anthony Morginos, who's a partner in our team, and Ellen O'Brien, who's a senior associate in our team. We're hoping we can keep this at 15 minutes, so we'll see how we go. As always, do check the contents of this podcast on Apple Podcasts, Spotify, and Google Podcasts. Anthony and Ellen, before I get into it, I did want to do a shameless plug just for the regulatory blog that we've all worked very, very hard to get up and running. So if you do just go to Google and type in Maples regulatory blog, you'll see that on there. And the idea behind that is to provide you, the listeners and clients, with an up-to-date, almost sort of every day, every other day, the latest and greatest reg news, not just from Cayman, but from BVI, Luxembourg, Ireland, and Jersey. So do take a look at that. And then the other shameless plug for us is congrats to Donnie, Ellen, and the team on recently winning the award in the US for Hedge Week for Global Regulatory Team of the Year. So well done, guys. So in that context, Donnie, I was pre-preparing this, and I had some points I want to talk about on the beneficial ownership consultation, and I'll hand over to you so that you can now track us through beneficial ownership transparency amendment number 2, 2025. Over to you, Don.
All right. Thanks, Chris. Yeah, so we have had yet another round of consultation on the beneficial ownership regime. Consultation drafts of the amending bills to the Act and to the regulation were published on the 17th of September, and there was a really quick turnaround, I think, a week or so to review these and provide comments from industry, which we did together with other industry players. We haven't yet had a final version of the amending regulations or the bill which would amend the regulations, but we have had a final version of the beneficial ownership transparency amendment bill, which is the piece of legislation which amends the Act. A lot of the changes in the consultation draft were fairly, let's call them administrative. There were a few things coming out of the Act where there were little bugs which needed to be tidied up. So I don't propose to go through all of that. What I think would be useful is just to pull out 3 or 4 of the changes that are I think either interesting or will be relevant for our listeners potentially on a regular basis. So one of the changes, and this is kind of half in the kind of administrative, half in the relatively interesting point. Section 12 of the Act is amended to put it beyond doubt what information or data points are required to be submitted in particular circumstance. And that circumstance is where your legal person, your Cayman entity, is claiming the alternative route on the basis of being a subsidiary of a listed person. Previously, the law was a little confused in that it didn't actually say that you had to list the name of your listed parent. By way of reminder to our listeners, the listed alternative route to compliance is the only alternative route to compliance where you can be a subsidiary of another entity which meets the criteria. But the law didn't actually say that you had to name what that subsidiary was. Now, I say it's kind of interesting, and administrative, because I think the technical guidance or the portal that CSPs are actually using to upload data did actually force you to name the listed parent. So there was a mismatch between the law and practically what people had to do. So an interesting update, but also practically an administrative change that is certainly very welcome. The other interesting change comes to Section 19 of the Act. Section 19 deals with restriction notices, and those provisions have been generally tidied up and clarified. Now, listeners will recall that a restriction notice under the Beneficial Ownership Transparency Act is the tool that's available under the BOTA regime, which is effectively designed to assist the legal person, so assist the Cayman entity in kind of forcing compliance of its beneficial owners in certain circumstances where you don't have the information, or the legal person hasn't reported the data that it needs to on its beneficial owners. The CSP has this tool available to them. It's effectively a a notice which places certain pretty hefty restrictions on the relevant interest that needs to be reported. You can't transfer it, you can't buy or sell it, all these other types of restrictions that the CSP places on that interest. The section previously cross-referred to incorrect provisions, and it was, to be honest, generally confused, which made it quite difficult for corporate service providers to actually determine whether or not a restriction notice ought to be issued. So thankfully, this amending bill does correct the mistakes, and it does actually delineate between when a restriction notice should be issued and in what circumstances. So, and also what a corporate service provider should take into account when it is thinking about issuing a restriction notice. So I think a welcome change. It does provide some clarity on the restriction notice provisions. So I was happy to see those come through. Nearly under the change. Two more. Section 22 introduced a new amendment, which I found it quite surprising that this wasn't in there, but technically there was no provision in the Act which specified that the registrable person, so the beneficial owner itself, couldn't actually make a submission to the registrar to seek its own information, his or her own information that is on the register. So that provision has now been included. And then the only other one is two changes to Section 26 and 29, and they basically relate to the administrative fines provision. So listeners will recall that there is a list of certain breaches set out in the regulations where it specifies that if a legal person or a CSP or a beneficial owner breaches those particular provisions, the registrar has the ability to issue an administrative fine, and that fine was set out in the law as a $5,000 penalty. The effect of the changes to Section 26 and 29 basically make it clear, and I think this was always Maple's interpretation of this, but to make it clear and put it beyond doubt that those administrative fines are not legislative maximums. The registrar does not, in the event of a breach, the $5,000 penalty doesn't have to be imposed. The changes make clear that the registrar should take into account mitigating or indeed aggravating factors to determine what level of administrative fine ought to be imposed. So I think this was a very welcome change. I think clarified the position. So I think we were pleased to see that come through. I think those are the main things.
On the whole, Donnie, you're saying good amendments. You're happy with the amendments? A step forward?
Certainly a step forward. Some of the things that I raised there, I think, have been bugbears for us for a little while. So it's good to see them cleaned up. And I have no doubt that we'll continue to see consultations and amendments to this regime as it develops, and as well as it develops across the world, as everyone else has their own beneficial ownership regimes, and as they develop and industry approaches change.
Excellent. And do we have an effective date for the bill or not?
No, not yet, actually. So it was gazetted, I think, on the 9th or the 10th of October, but we're yet to have it formally passed. So not as of yet. I haven't checked this morning, but I don't think we have an effective date.
Yeah. Okay. Whilst we were looking at the boat consultation, which is no longer, it's now the bill, we were also looking at the CIBA consultation. Do you want to just give the listeners a few points from that consultation again, noting to everyone this is a consultation. It may change completely. It may not even come through into law, but we do think it's important just that you are aware at least of a few of the takeaway points that may come through. Yeah,
definitely. And this one was probably more substantive than I think from when you compare it to the beneficial ownership one. So SEBA, the Securities Investment Business Act, we've had that consultation draft come out. It proposes pretty fundamental changes to the approach, both the regulator's approach and ongoing responsibilities for SEBA registered persons. So listeners will recall that you'll have SEBA registered persons and SEBA licensees. So registered persons, I think the intention behind that kind of regulatory regime was a lighter touch regulatory approach for Cayman entities performing, securities investment business. This consultation draft proposed pretty fundamental changes to capital requirements, liquidity requirements, reporting requirements, obligations to maintain audited accounts, ongoing responsibilities, and approval applications that are required to be made with SEMA. On a whole, I think it's the, the intention behind the consultation draft seemed to be a shift and a push of the registered person regime closer to the licensee regime. So some of the key amendments that were proposed in the consultation draft, again, as Chris, you said, this is not law. This is a consultation draft. We haven't seen the final bill come out, and I think we're expecting potentially another round of consultation, hopefully. But there was a new provision proposed where it effectively set out an ability for SEMA to take a risk-based approach or a proportional risk-based approach to licensing and registration decisions and applications. I don't think we were quite clear on exactly the intention behind that, because it did seem like the authority SEMA does already have that ability to take that approach. And I think actually putting reference to that in the law did kind of muddy it, because it would make it no longer exactly clear what is required in the context of an application. Other key changes are, the government are proposing SEMA approval, pre-approval is required in quite a few more circumstances. So changes in shareholding, changes in directors, other changes to the kind of operating functions of the civil registered person. Currently, under the current law, certain changes can be made now, and then post notification is given to SEMA. This helps these registered persons kind of flow, continue with their ongoing operations, and not have to kind of wait and pause for this kind of deal flow or ongoing operational changes. So I think that would be quite a fundamental shift. The other big one, I think, is that the consultation draft proposes that SIB registered persons can be required to have auditor's appointment and to provide audited financial statements to the authority. This requirement has been, with the licensee regime since its inception, but never with the registered person. So if that were to come in, that would be quite a fundamental shift and quite a fundamental cost shift for registered persons as well. Having audited accounts obviously isn't free, and having the requirement to ongoing report them to the authority, I think, would be quite a change for registered persons. There's another proposal, and this will be the last one that I mentioned, that is set out in the schedule, which lists the type of activities which are SIB, which are securities registered securities and investment business. It puts in a fairly broad, fairly vague provision which allows Cabinet to make provision and make new laws for SIB-like activities. I think our feedback on that provision is that it is unclear exactly what activity is trying to be focused on here. And I think our feedback and industry feedback on that provision is that if new activities are to be brought in scope of securities investment business, and I think the idea is that it's an evolving space. The regime will change. That's fine, but I think we need to be crystal clear on exactly what activity these provisions are trying to capture.
Yeah, perfect. Okay. Thanks, Donnie. And again, as we've both reiterated, that is a consultation only. Industry, Maples, and other significant stakeholders have gone back with their feedback on that. So let's see where that one lands, and then maybe next month we'll have you on talking about the Securities Amendment Bill rather than the consultation. Ellen, Donnie has touched on some new laws and a consultation. I did want to have you on this because I know that you've got significant experience on the CRS and the economic substance penalties. We've talked about this, I think, every other podcast. We talk about the trend in enforcement and effectiveness, particularly with the FATF review coming up. The focus really is on effectiveness and enforcement. Can you, I think it'd be useful for everyone if you could just track us through some of the basics, how does this work for CRS or economic substance from a client's perspective? What's the first step? What's the second step? And what are you typically seeing that clients are missing? And is there room push back. I think it's probably easy if we talk around that, so that some of the listeners that do have Cayman entities can get more of a flavor of what they should be looking for, and how they can engage with us or other service providers or even in-house to ensure that this, starts to stop, because we are seeing a significant amount of penalties within the jurisdiction, most of which are just, faults that could have easily been corrected, and that there's just a mismatch there. So if you could just talk us through that, I think that'd probably be really beneficial for the listeners.
Yes, certainly, Chris. As you mentioned, we have seen a recent uptick in enforcement activity by the Tax Information Authority in respect of both CRS and ES filings. And I think listeners will be particularly interested to hear that last week the authority began issuing breach notices for failing to submit CRS compliance forms in respect of the 2024 calendar year. So the deadline for relevant financial institutions to submit the CRS compliance form was the 15th of September. So just a few weeks ago, really. So the authority was really quick off the mark in issuing the breach notices this time round. So as you say, I think it would be helpful to discuss a little bit more about the breach notice itself, what it says, what it is, what it proposes, the deadline to respond, and so on. So that's what I'll kind of step through today. And then we'll talk a bit more about the penalty notices and what we're seeing in respect of the ES filings as well. So in respect of the breach notices, so where the authority has identified that a financial institution has committed an alleged offence, the authority will propose to impose a penalty on that financial institution for the offence it believes the relevant financial institution to have committed. So a breach notice will always be issued before a primary penalty notice is issued. So listeners that may have received a breach notice will note the language used on the breach notice indicates a proposed action and a proposed penalty. And this is of significance because the breach notice is not a final penalty notice. So we're still at the proposed stage. And this is a very important stage as it gives the affected party time to engage with the authority with regard to the alleged offence. So the affected party has a minimum of 60 days from the date of receiving the breach notice to make written representations to the authority about the proposed action, the proposed amount, or both. And it's also important for listeners to understand that this is the only formal opportunity of engagement an affected entity will essentially have with the authority. So it's effectively their opportunity to put forward their side of the story. So to give their reasons to the authority about why, for example, they have not submitted the relevant filings, be that under the CRS regime or the ES regime. So it is a really important opportunity for the clients, and we always say that engagement in this regard is key. So the extent to which a breach notice is remedied is a factor that the authority will subsequently consider when deciding to issue a penalty notice. And then if so, the amount of the penalty notice, what that amount should be. But it should be noted that remediation does not itself preclude the issuing of a penalty notice. So it's always very important to get the remediation steps done and submitted in a timely manner, but to note that taking those steps in and of itself won't prevent a subsequent penalty notice from issuing. So I suppose if we think about a client who has just received a penalty notice, a breach notice, what should they do? So the first steps are of course, to review the breach notice carefully. So ensure that the notice is addressed to the correct entity. It has the correct entity's name and the correct principal point of contact in a CRS context. It's also important that the client takes note of the relevant deadline dates. So there will be an opportunity, as I mentioned, to submit representations to the authority, and on the breach notice itself, it will set out when these submissions are due. And a client will have a minimum of 60 days to submit written representations to the authority from the date upon which the breach notice is received. So the client should also consider the action and the remedial steps as outlined in the notice as soon as possible. So again, it goes to this engagement piece to make the remedial filings as soon as possible, engage with the authority, and put your best foot forward, essentially.
And so, Ellen, would you say, and I'm mindful we're probably going to run out of time as we always do, but would you say that the breach notice is equally as important as the penalty notice itself?
Yes, and if not more important, I think, because you need to make those filings and to be in compliance with your obligations under be it CRS or ES. So a very, very important part. And it also gives the client a good shot at waiving or reducing the fine to a certain extent, that we have seen in the past where clients engage early with the DITC, that the DITC will take this into consideration when reviewing the written representations to waive or really reduce the penalty amount. So early engagement is definitely key.
Yeah, completely agree.
If we then turn to the penalty notice, so assume that you have received your breach notice, you've submitted the relevant returns, you've submitted the representations, and the DITC then subsequently issues a penalty notice. So under Regulation 31(1), there are certain requirements that will be outlined in the penalty notice. So similar to the breach notice, the key things that you should look out for is that it addresses the correct entity name. It will also importantly outline the amount of the penalty imposed, the reason for the authority's decision to impose a penalty, and it also outlines that the affected party may appeal to the court against any decision to impose the penalty amount within 60 days of receipt of the penalty notice. So importantly here, once a penalty notice is received, that the time to formally engage with the authority has now passed. So really payment must be made then by the specified deadline on the penalty notice, and there are specific instructions provided in the appendix to the penalty notice, and thereafter then you must email the DITC, email the authority that the payment has been made and provide evidence. As I indicated, that there is a formal appeal process to the Grand Court. This, of course, will be an expensive exercise, and of course, an affected entity would need substantive grounds to make such an appeal. So one would need to demonstrate a valid ground of appeal, which could include identifying an error of fact or law. So, for example, that the entity did in fact meet its relevant obligations for that relevant reporting year, or something along the lines that the authority's failure to properly consider and apply the required statutory considerations when deciding whether to impose a penalty and or its quantum. So really that there needs to be that substantive ground of appeal. Otherwise, the penalty ought to be made by the penalty deadline.
Yeah, and we've seen quite a lot of successful appeals, and we've also seen a large number of successful pushbacks on breach notices, because there are legitimate reasons why you may get the penalties waived or disapplied, as the case may be, but you really are up against it if you've been issued a breach notice and you haven't replied, and then sort of a few days just before, after receipt of the penalty notice, you then sort of kick into gear. That's quite a difficult task, pushing uphill to get that disapplied.
Yes, it is. It is for sure. I also just wanted to quickly touch upon some of the ES penalty notice, the economic substance penalty notices that we have seen recently. So the authority has recently issued penalty notices where the authority has determined that the affected entity has failed to file its ES return for the 2022 financial year within 12 months of the financial year end. So in those circumstances, the authority considers that the affected entity has failed the economic substance test and has imposed the maximum penalty permitted under the ES Act. and the penalty amount is approximately 10,000 CI dollars, which equates to over 12,000 US dollars. So it is a very punchy penalty that is imposed. That affected entity in those circumstances, they would have received a penalty notice in and around this time last year for failure to file the ES return. And since no action was taken in that time, the authority has deemed that the entity has failed the ES test and has imposed that chunky penalty. Separately to that, we're also seeing penalty notice being issued in relation to missed ES reporting filings for the 2023 reporting period. And those penalties imposed are approximately 2,500 CI dollars. So again, none of these penalties are to be sniffed at. They are quite punchy penalties. So it's very important that clients really understand their obligations under the CRS or the ES regime. And I just lastly wanted to kind of touch upon some of how to avoid any potential future penalties going forward. So the first thing, it would be an idea to download our regulatory calendar on our new blog that Chris mentioned at the top of the podcast. And this reg calendar has the relevant filing deadlines on there. Then in terms of if an entity has received a recent breach notice for a failure to submit the CRS compliance form, if there is a third-party service provider engaged to file your FATCA CRS reports, ensure that the CRS compliance form filing is included in the scope of services, or ensure somebody from within your organization is making the relevant filings on time to avoid any future penalties being imposed. Really importantly, ensure that your principal point of contact has access to the DITC portal, that they know their login details. The DITC user guide is a really good resource on the DITC's website if anyone needs further information in that regard, and ensure that the principal point of contact and the authorized person's details on the portal are current and correct.
Yeah, I would completely echo that, especially the last part around the principal point of contact, also ensuring that he or she who is on there is the right person. Often, right at the beginning of the infancy, most clients would put the most senior person on there. And then we are occasionally finding out that the senior person maybe doesn't have access to, all of the emails, or that they'll go through to a spam folder or something. So definitely check that. Okay. Thank you, Ellen. Thanks, Donnie. One other thing just to mention to further complicate, we do have a CRS consultation in the works as well. So what we've been talking about on CRS may change. Again, this is another consultation. So I think overall, particularly as we come into the close of the year, do get in contact with your advisors, Maples, or whoever you work with, just to ensure that you do not miss any of these deadlines. Most of the penalties that we're seeing come through could have been avoided for the most part if people were aware of the relevant deadlines and what was required. So trying to front foot that is a good reason. Obviously, we're always here to help everyone out to the extent needed. So Donnie and Ellen, thank you as always. I think we are over time. And if anybody does have any further questions, reach out to us or just have a look on our blog, and hopefully that will be of assistance. So thank you for listening. Thanks, Donnie. Thanks, Ellen.
Great. Thank you.